aboard, everyone, to a new session of charting across the board, the board, the board, the board, the board, the board. Happy Thursday, everyone. Thank you for joining me here on another session of charting across the board. I'm going to lower the levels and soundtrack today, a little jazz to bring some vibe before we navigate the levels in the price action across different trading instruments. Look first, then leap. I like this quote from TradingView. The best traders require research, then commitment. True. Your trading spacecraft is fuel and ready. This seems to be incentivizing FOMO, the fear of missing out. This is where we are now in the price action across the crypto space. Let's navigate the chart on the price action for Bitcoin. Start the stream. I hope everything is working in the background and that you guys can hear me clear. Once again, welcome aboard. Before I jump into the technicals, let me bring a new partner in the space, which is Apex. I'm gonna mention why I am partnering with this company. Got alerted by my chart here on the S&P 500. Appropriate timing. Let's bring our new partner, Apex. Why am I partnering with this proprietary trading firm? Why? Because they are promoting traders. This is where the proof is in the pudding. You put your strategies to work and also get funded. At the same time, there is a the first $25,000. Once you pass the evaluation or the evaluation test, you have you can make $25,000 on your account. After or beyond that, there is a 90% the profit split between the company, 10% for the company, 90% for your own profits. Okay, this is a company that I believe is enhancing traders, helping them to develop their own edge. I'm also part of this evaluation, already passed one with Topstep and now moving into Apex. I do believe this company is a legit one, not like many offshore crypto companies in the space. This is not an exchange. This is a company that fund traders, test their strategies. And if you have the skills, you pass, and why not get paid by a serious company? They have been paying traders with over 529 million, nearly a little over $500 million. If you're interested, the link is below. You guys know I'm not used to this, but we're trying to, of course, grow our community and also partnering with serious companies. Once again, Apex, thank you for supporting us. And if you have the skills, this is your time to prove yourself. All right, getting this out of the way, we start with the price action on Bitcoin. What a terrible marketer am I? All right, moving into the price action for BTC. On the previous stream, we were looking at a W formation. There were others in between that only generated harmonic pauses before, of course, the upward traction, where our focus is now. We had two harmonic ratios, two extensions, the 1.618 as well as the 1.90, where we indeed tested. There was an overthrown of the 1.90 before rejecting and now still hovering at the 1.618, slightly higher now. Recapture the 1.618, the harmonic ratio, and now potentially ranging. By the way, we have also an intersection between price and time expected for July the 19th. Okay. Before getting a rejection, are we going to experience the measure move of the flagpole previously presented on the price action for the daily time frame? Before jumping into that argument, I would like to also zoom into the hourly time frames because we can observe potentially a W formation, or at least an early identification structure, as long as, once again, the previous low from the rejection, the overthrown of the 1.90, does not break below it, okay? There can be two arguments in construction, too early to tell, only until, of course, further evidence dictates otherwise. That can be a pending information. In the same manner, if we're not breaking below today's low, we then have the argument for a W formation before I present my setup, of course. If that's the case, there can be another retest near the 1.90 at 121, or the 0.886, slightly higher, 122, or once again 122, nearly 123. We will see. However, no clear directional bias from these levels on the hourly time frame, okay? On the daily time frame, of course, this correction, if that were to be the case, will depend on the next support levels to go higher, okay? Then, ideally, we'll compute the fib retracement from the C leg of the move at 105 to the highs at 123,000. You guys already know the deal. Common areas of retracement for true support levels, okay? The common areas will be ideally 116, already tested, piercing below, slightly below, then 114, 112, also looking left, market leaf clues, even all the way to the previous all-time high from May of this year at 111. However, there is a large range. If we look left, once again, these are now key levels of support. If prices on BTC were to retrace back to those levels, that will be 109, as well as 112, 111. Basically a range for indeed a true support levels before jumping into the argument of this bull flag, okay? A continuation structure also presented nearly 3 weeks ago. So therefore, if that were to be the case, a support levels, even a 106, can that be the case? We'll see, my friends. I don't want to make any assumptions, rather letting the technicals speak for themselves before there is an actionable execution on BTC for a continuation that will be pretty much the measure move of the structure, okay? That will be the measure move in this case from already the levels, 107, potentially to 140, 130s, okay? We will see what the price action tell us. There are, however, other levels in the price action for some altcoins. Let's jump now into XRP. XRP is presenting divergences, negative divergences on the 4-hour, okay? This can be potentially a pause in confluence with a W formation for a bearish BA pattern. Only to bring some context here, also on XRP, if you guys remember our last stream, I'm talking about somewhere here early this year also, in a similar manner as Bitcoin, the expectation for, of course, the XRP community, I would say, was to higher levels. However, we presented our arguments for a W formation back then and to remain cautious. Why? Because what occurred after was indeed a significant correction of 52%. This is why my approach now is identifying new information. It's been almost 6 months. Therefore, I'm not trying to remain with my bias, rather letting the chart or the data dictate the new information, okay? Here we have a W formation on the daily, okay? Already we can observe we have an overspill this morning at 329. And also on the momentum indicators, we can observe that prices once again are entering that overvalue conditions, okay? Similar to what occurred previously during last year, November 2024, before, of course, forming another divergence here on the daily. We have the arguments for a bearish butterfly. Back then, the sentiment extremely euphoric over and over. But again, we present our unbiased approach in this manner. We knew that the W formation was next. Correction of over 50%, 52%. Of course, new support levels were found. And now, can we go any higher? We will see. There are key levels in some altcoins, but for now, we need to break key levels of resistance for the 0.886. We do know that if a violation of these W formations are starting to, or at least starting to underperform, we then know that something larger is developing. For this, I would like to present the next one also on Ethereum. On Ethereum, in a similar context, we are nearing previous highs from December of last year. You guys remember last year we have the argument for the bump and run idea, okay, that was here at these levels. We had those arguments, the bump and run, and we didn't complete the 1.13, but we tested the higher levels, the previous high also from March 2024. There was I believe the move was from the 2800 or so. That move 44%, then W formation correction to where this one, the 113 or 1300, was also within the radar on the weekly time frame. If you guys recall, we were debating whether what appeared to be an M formation here was certainly in the cards. Okay. Of course, the argument, we're not going to go to those levels, but what occurred, certainly a test of the 1300 levels. Can this be perceived as type 1 on Ethereum? Potentially. Ethereum is certainly presenting some key levels. I would like to also mention that there is a long time, a pending W formation, basically for over nearly a year now. I believe it was from the previous low in October. We're, of course, monitoring if this level of 4100 were to be breached, then we can compute back then, okay, the 1.272, a 5000, 1.41, and the 1.618 for the pending W formation, okay? Can this argument change, or do we have new data? That can be the case if this leg is now here in, okay? Can always be the case, but keep in mind, this argument requires that all of these conditions are met before such a scenario, okay? Reason why we move into a daily time frame and we pay attention to this W formation at the 0.786 and the 0.886. These are pending W formations on the daily time frame for Ethereum also, that depending on the reaction move at these levels, I will then move into the midpoint between the daily and the weekly time frame for Ethereum. We look at the 3-day chart. There is a right angle in ascending Browning formation, ideally a continuation or a bullish continuation structure, okay? We can tap the 0.786, 35.23, or the 0.886 if we compute all desirable highs at the X point 41 back to the lows, 1300 back to the highs, the lows, and a pending formation. However, as you guys know, there can be also arguments for other anchoring points, such as the lower high than the previous high, okay? We will see. This requires a proactive monitoring before deciding to executing any position here on Ethereum. Okay. However, we do know that the levels of resistance are being approached. First, this will be technically already is a bearish Garley, now that I see here on the chart, based on the perception of Larry Pesavento. Okay. However, if we anchor the 0.886 slightly higher, 37.96, that will be pretty much a very spot pattern for the research on Scott Carney. Okay. If I'm speaking cut on and off or a little slow, it's because I'm listening to my headphones and hear my voice, and it's a little distracting. However, I'm trying to get used to this and be more fluent. But again, excuse all the flaws behind the scene, my friends. Okay, here, mainly, once again, these are key levels of resistance. If we approach the previous high of 41, we then know that will be the third connecting point of this right angle and ascending Brownian formation. That ideally, once again, is a continuation structure. There will be support levels to monitor, okay? I'm not suggesting we're going to go straight up from here, okay? But there are certainly levels to monitor in between. This is why also the timing becomes extremely crucial. Why? You guys already know the story. The same all-time high idea back in January of last year, even last year in December to higher levels, was in the cards for many, but what occurred? Correction, new information presented, and now we have new variables to work on. Uncharted territory for now. Okay, there is no price action correlation. Looking left, all we have is the previous information from early this year as well as last year from December of 2024. Okay, new information, new variables, we are moving accordingly. Going back into the price action for Ethereum, once again, key levels of resistance. Depending on the rejection of these levels or either of these levels, we then monitor the support levels, okay? And that, my friends, will dictate the new informations, suggesting that prices are ideally tend to outperform any information that might be printed on minor time frames, the hourly or the 4-hour. So far, this is what I'm tracking on Ethereum, okay? XRP, once again, the same levels. We are within the overspill. I'm tracking if we can close above or below the 0.886 out there, $3.19. And of course, depending on the rejection or new support levels, we will monitor if the common areas of retracement will be the next support levels. All of these are only an interpretation of technical information, okay? We can go to much higher, to $10, but I'm tracking the levels based on different time intervals, hourly, 4-hour, and daily, and so on. I hope this is clear. I cannot see any comments. If you guys have any comments, let me know. I'm gonna jump very briefly here into the stream on my phone. See if you guys have any question. If not, I'm gonna move on and present what's next, okay? Once again, the reason why I never FOMO, my friends, is the same. Previously, extremely high. We had colors for 250,000 and so on, but the timing is where we need to pay attention to, because we don't want to make calls and then make those significant declines, 32%, okay? And of course, here we have new information. My idea was that depending on the reaction, 105 was the highest point for that M formation that many of you are already familiar. I'm not still disregarding that idea. Why? I'm going to present here very, very briefly, because if we now compute the measure moves or the trend-based FIB time for a cipher, we then compute this tool, okay? From the lows to the highs, back to the lows. Which are the ratios or the C point of a cipher? The 1.13, the 172, and the 1.41. Why am I anchoring from the lows to the highs back to the lows? Because the C leg, you can observe here, the cipher pattern, there is a C point that is based on the trend base extension, okay? Where, once again, the C point remains the unknown factor. We did have 74,000. I personally did not expect this upward or rapid move, but there was indeed an expectation to at least a bounce. How high? It was always the question. Now that we breached the previous high, the 1.13 is already in for that argument of a C to a D, okay? But once again, there is plenty of ratios. The 1.13, the 1 to 72, okay? This is matching. Just gonna observe the legs A and C at the 172 matching the trend base tip extension. Reason why we anchor the lows back to the highs, back to the lows for this particular pattern, okay? In the event of a C to the D, okay? Anyways, only bringing that argument in mind to not let our emotions dictating what the next move will be. Let's remove the bias and move accordingly based on what the chart is telling us, okay? So now, depending once again on the support levels, if there's a correction, we have an intersection between price and time starting on July the 19th, in 2 days. And the next one, we are expecting another intersection between August the 3rd, okay? And that will be a key level to monitor the prices across the board. Equities, BTC, and now let's jump into metals, my friend. The price action on gold. There is some levels. To me, gold on the weekly or the monthly even has been extremely overvalued. This does not mean, okay, does not mean prices will correct majorly, but I wouldn't be surprised considering that the RSI in the monthly trading at 85 is within overvalued conditions, okay? At least a pause, a breather before maybe another continuation. But on the weekly, I'm looking also on August the 3rd or the 5th for this instrument before heading much higher. Ideally, the support levels I would like to monitor are, once again, common areas of retracement: 31.66, 3,059, and the 0.618, 29.53. These are support levels, immediate support levels that I would like to monitor before another upward traction. Jumping into a daily time frame, we're going to observe the price action or the contraction of the price action, printing the upward levels here from the highs to the lows, a symmetrical structure. These are known as neutral patterns. Why? Because they can break on either direction. The measured move of the structure from the wedge, the heights of the wedge, will be measured either to the lows, matching the common areas of retracement, as well as the highs in the event of a new all-time high, okay? You can observe either argument here also on the price action for gold. We compute the lows to the highs, maybe a Garley matching our expectation or the retracement levels, okay, depending which levels this pattern breaks. If we break towards the upside, we then have also another argument here, the B point, 0.886. This normally yields a 1.618, okay? That will be at 3,700, or the 1.90. 1.90 will be pretty much 3,800, 4,000 basically. However, before heading to those levels, if the price action allows, I would like to see true support levels on the weekly, okay? Depending, once again, on which direction this pattern breaks. Symmetrical structure, okay? To finalize the stream, Let's move now briefly also in the price action for the S&P 500 before jumping into a DXY. On the price action for, let's see, what do we have yesterday? There was some news about the chairman, the Fed, getting fired. However, I would like to present why I'm trading small time frames now using these pro firms. I already mentioned that my projection from 2022 was already made, okay, from December 2022, favoring the upward traction up until these levels, 61, 62, all the way to 63.55. From there on, we already experienced a first decline that occurred early this year, okay? Before, of course, recapturing the entire segment of the move to current levels. Okay, that idea, once again here, we were expecting an upward traction that indeed manifested up until December, and then a decline. So an upward move, 76%, another downward move, type 1. You guys know there is type 1 and type 2 returns on this harmonic structure. The first one already manifested, 21%. However, buyers indeed stepped in, and of course, this can be perceived as another type 2 return. Will this be the case for a type 2 and true reversal point? I do not know, my friends, but once again, reason why I'm now looking at minor time frames to capitalize on all the moves that I can make on these M&Ws. That's the example I was sharing the other day, this W formation prior to the news, once again, prior to the rumor about Jerome Powell getting fired. There was a very sharp pattern with a resistance zone around 63.40s, which, by the way, is a zone I'm looking here potentially for the overspill of this monthly pattern, okay? This is a monthly pattern. It took nearly 3 years now. In October, it will be 3 years when the sentiment, you guys are already familiar, was extremely pessimistic. Now these highs, everyone and their mother are making new projections for new all-time high, which is fine, right? I have nothing against previous errors from other people, okay? Anyways, here, W formation, pending W formation on the S&P on the hourly time frame. What occurred prior to the news was indeed a correction from these levels, okay? And of course, we have another news-driven sentiment yesterday, or news-driven catalyst yesterday, creating this low. And then, of course, the news was retracting that no, Trump is not going to fire Fed, and this is what we have here, okay? However, these levels are also within my radar. Correction, which, by the way, this can be a substantial move trading futures. 100 points for one contract. You multiply by 50, okay? And that is $5,000 for that move alone. Of course, now we have another retest of those highs that was also within my cart. I was looking at this at the same time, July 16th, and now I'm closely tracking the current levels we are trading, okay? Potentially for an execution if that were to be the case, okay? So once again, we're already breaching the 0.786. That was the start of the session, which in theory, I've been trading this only at the reaction move. For example, here on the 15 minutes, we can observe the rejection, okay? On the 15 minutes. Can we test the 0.886 for a true turning point? We will see. But an example here, my friends, reason why I love these pro firms now, because it allows traders to manage their risk and not trade your own capital. You're trading with a firm capital, and also you're capitalizing. They're paying you for trading, basically. But first, you must prove yourself, test the valuation. If you can pass, you then have a funded account where you can get paid. What a deal, okay? Anyways, correction of 13% time 50. That could have been your only trade for the day, over $600 or $500 in this case, or nearly $700 almost, okay? For that move alone, you can trade one trade a day, move on, look for another formation and execute the same levels. Reason why after a major substantial move for the bull market, I decided also to now look at minor time frames. Why? To capitalize as much as I can, okay? This is why the reason the partnering with Apex came here into place. And I indeed support companies that actually work on developing your edge. You have your risk mitigation measure, position sizing, you're not over trading, you're not FOMOing, you leave all of those negative variables aside and only focus on the chart, okay? Removing your bias, removing if price may go to 10,000 on the S&P. Trade what you see, as our friend Larry Pesavento may say in his book. Everyone, thank you for being here. To finalize the stream, reason why also are we nearing a correction point here? Potentially that can be the case. If we go here into the price action for the DXY, my friends, we were tracking a pending information on the weekly, okay? On the weekly, this may imply that we are indeed approaching a turning point, which would potentially bring some turbulences in the equities market and of course by default crypto, okay? But again, the support levels of that correction is what needs to be carefully addressed, monitor, and act accordingly. I'm going to try to trade this after I end the stream. Of course, it will depend on the correction or the reaction mainly. There is no overvalue conditions on the 15 minutes yet, but potentially on the 10 minutes and 5 minutes. 5 minutes are extremely low, but they provide 10, 20 points move. I've been trading 30 points in the price action for the S&P, which is over 1,500. Significant amount for one trade, right? Zero stress. All right, everyone, thank you for being here. I'll see you guys on the next one. And remember to live a life with an attitude of gratitude. Cheers, everyone. Bye.